So really, I think those are the big things:
Hmm.
fees, tax implications, and then I'll say it again: liquidity, liquidity, liquidity. Like really understand. Don't put money into these alternative assets that don't trade regularly, expecting to be able to get money out in 6 months.
Yeah, everybody, welcome back to another episode of the Richer Geek Podcast. Today I have Mike Ivancie. Mike is the CMO at UpMarket. It's an alternative investment platform. We've had some very interesting type of people come on, and we'll talk about what type of alternative investments that UpMarket concentrates on. But they are democratizing the investing landscape by giving individual investors access to a range of unique opportunities normally reserved for institutional investors and the ultra wealthy. How you doing, Mike?
Hey, Mike, I'm doing really well. Thanks for having me today. Excited to chat with you.
Yeah, so these are some of the very unique assets because I didn't even think, and we'll get into this a little bit, that we could even attempt to invest in some of these things. I did. So it's very interesting for us to get into some of this stuff. But give us a little bit of a background of who you are and how you became the CMO of UpMarket.
Yeah. Well, again, thanks for having me, Mike. And so, my background, I'm actually a recovering lawyer. I practiced law for a few years and I started my own practice and I got really into marketing my practice. And it was sort of this light bulb moment for me doing content marketing before I knew what content marketing was and having leads call me and getting business that way. And I was like, God, I love this. This is so cool. I want to get into marketing. And so I ended up getting an MBA at Berkeley. And I've always had a lifelong passion for investing. It's something I sort of bonded over with my late grandfather. And so I got that MBA and I started working in fintech and doing marketing there. And then Upmarket is my most recent stop, and I absolutely love it because I get to talk about really interesting companies, really interesting hedge funds, private equity funds, and try and educate investors about them. So it's awesome.
So for our listeners out there, they'll probably say, "Oh yeah, I know UpMarket," or maybe not. What is UpMarket? How long have they been around? And what do they do?
Yeah. So Upmarket is an alternative investment platform, and really what that means is we are focused on helping investors access alternative assets. And so traditional, you think of your stocks, your bonds, maybe a rental property or something like that. Alternatives are private market opportunities, private debt or credit, private equity. And within that is kind of this subclass that is taken on the moniker of pre-IPO companies. And what that really means is you're investing in secondary shares in companies like OpenAI or SpaceX or Anthropic. Some of the things that are catching a lot of news right now, people are interested in. And so we enable that. And the idea of upmarket isn't to be the sole place you invest, it's to be kind of that nice little dessert or add-on to a full meal, a full diversified portfolio where you can say, God, I really believe in this AI theme. I really want to access Anthropic or OpenAI, or gosh, I really think SpaceX is a special company. I want to invest in SpaceX. And the caveat to upmarket is, it's hard to access these products. We're trying to lower
Right.
barriers, but you have to be an accredited investor.
Mhm.
You have to qualify to invest in most all of our products, and then certain products have higher qualifications. But we're trying to lower the access so any accredited investor can tap these private markets and get exposure to unique asset classes that they otherwise wouldn't be able to.
Now, um, are we buying shares? Are we buying into a fund? If I say, AI is going to rule the world, and they probably will be, um, and I give you X amount of dollars, what is that minimum? Just out of curiosity, and then what am I buying into?
Right. So minimums vary, but typically around 50,000, maybe 25,000 for some offerings. So we do have venture funds and sort
Mhm.
of pre-IPO funds, and that's where you have a professional manager who's going out and doing all the deal sourcing for you. They're going to maybe put a little money in Databricks, a little bit of money in OpenAI, a little money in Rippling or something like that. We have funds like that. And then we have more direct secondary funds. And so what that is our investment team is going out and sourcing secondary opportunities in companies. So
Mhm.
primary, you often hear about primary rounds, right? Like
Mhm.
OpenAI just raised a Series C at whatever valuation, or that's a primary round. And then there's a secondary market for all these companies as well, where broker dealers like us are buying and selling these shares. And so what we're doing there is basically finding a partner that wants to sell some of that, creating a fund wrapper around that, and then you're investing directly in that, and you're tied down and connected to those shares within that company. So Anthropic, for example, Mike, if you're a big believer, you say, upmarket, do you have Anthropic? If we do and it's available, we say, okay, here's the minimum. How much do you want to invest? And then we're going to do the online subscription process. That's all online on upmarket. No, wet signatures. We really try and simplify it. All the management's online. And you would sign those contracts digitally, assuming you're a credit investor, everything checks out. We do KYC, all that.
Mhm.
And then you wire the money and you're an investor in Anthropic and you're getting updates, quarterly updates, and you own X amount of shares based on how much you invested.
Is there a typical like amount of time that someone would invest with you, or is it just until they go um, public? Is like then all of a sudden it becomes converted, or how does that work with, let's say, SpaceX goes public?
Right. So, concrete example for you
Mhm.
early on, even before my time, but we offered Airbnb to investors when they were still private. And then, of course, Airbnb IPO, and the company has done quite well. And typically, what happens is after the company has that liquidity event, whether that's IPO or M&A activity, they're bought out. If it's M&A, you're probably going to get cash in lieu of shares because it's now, rolled up into another company. But
Mhm.
typically with IPO, you're going to get the shares transferred to a brokerage
Mhm.
account once that transfer process takes place. Sometimes, if for some reason you really wanted cash, you could probably get cash in lieu of shares. But
Mhm.
that would be the process. The company IPOs, if there is a lockup, sometimes there is a little nuance there where, depending on the share class and how long it's been held, there may be a lockup period. But
Yeah.
then those shares are transferred to your brokerage account and you're free to trade or transact in them as you like.
So, a lot of people are thinking just like, I don't know, is it risky? Is it not? I'll just throw it into an S&P, and be conservative. What are some of the pros and cons where you can sit there and say, hey, look, everyone, this is why you want to go into a pre-IPO. So give me just a couple of the pros that you've seen and then some of the cons that maybe is the reason why it's not for everyone.
Yeah. Well, I'm a big believer in building a kind of comprehensive portfolio, right? And so
Mhm.
if someone came to me and is like, I want to put 100% of my net worth in upmarket, I'm not a
Yeah.
salesperson, so they wouldn't come to me, but they'd come to one of my colleagues. We would advise against that. Like there is risk to these investments, and really, they're meant to be a complement to a full portfolio, right?
Mhm.
Um, but I can share definitely, I'd love to share some of the pitfalls
Mhm.
or challenges with alternative investments and kind of the private markets generally. Liquidity, biggest one. You should always know when you go into investment, how do I get out of it? And what are the cons of getting out of it, right? So, with your traditional stock market, it's really easy. The market's open 5 days a week typically. You can just go hit a bid and you're exiting. Maybe it's not the exact price you want, but it's liquid fast. Private markets aren't like that. You have to find a willing buyer if you're a seller. And certainly, we may try and help facilitate with that, but it may not be at the price you like. And you never really want to be a forced seller in any market, real estate, alternatives, anything like that. And so I think it's really important for investors to understand there's limited liquidity in alternative assets typically. And there can be high risk. We saw in 2021, 2022, a lot of these, alternative investment, these pre-IPO type companies, if you were an investor in something like, say, OpenSea or some of that crypto stuff, you
Yeah.
really took a beating on that. And then it's hard to get out if you want to get out, you're going to get out 70% down. So the risk can be greater, and it's very cycle dependent too. One thing about investing in companies sort of expecting a liquidity event, which, we can never promise a company is going to IPO, they could stay private forever, but you kind of have to time cycles. And post 2021, the IPO window really closed. And then also there was kind of a crackdown from regulators about M&A. The hyperscalers, Google, Amazons of the
Yeah.
world, they're the ones with all the money to buy companies, but the regulators weren't really, kosher, weren't keen on them doing that. So it closed the IPO window, it closed the M&A window. And then it's like, okay, well, how am I going to exit that? And so I think any pre-IPO investment you go into, you need to think about what are my chances of exit and how long could it be? Because if the market's hot and the IPO window is wide open, maybe your exit window is short. But if, we hit a downturn, liquidity is low, maybe that window all of a sudden is extending out multiple years, or maybe it turns into a decade. And so, that's why I said when I first tried to answer this question is like definitely not for everyone, shouldn't be an entire piece of your portfolio. The way I think about it is like, let's say I've worked at Merck or Genentech for 25 years. I've got a lot of money in S&P 500 index funds. I've got a lot of Merck or whatever stock, but I really believe in this little thing, or I really want to hedge this risk in my life. Okay, then maybe finding a hedge fund that does energy, or a hedge fund that trades at assets that's not correlated to the S&P 500, or oh, I believe in this AI company, I want to invest in them. Having that be a piece of your portfolio, I think that's where we come in and can provide a lot of value because we provide access to that. But there's definitely risk. There's also more fees with private markets, just transparently. You're going to have, typically with a deal like this, you're going to have a subscription or broker fee. You're going to have an annual management fee, maybe 1%. And then a lot of the fund managers that sell these secondary shares are going to be charging carry that we're just going to pass on to customers. And that could be 15, 20, 25%. Um, so really, I think those are the big things:
Mhm.
fees, tax implications, and then I'll say it again: liquidity, liquidity, liquidity. Like really understand. Don't put money into these alternative assets that don't trade regularly, expecting to be able to get money out in 6 months.
Mhm. Curious about growing your wealth. The best opportunities aren't always the most obvious. That's why we've partnered with Bob Bernatas of Franchise with Bob. He specializes in helping investors like you leverage franchising, an overlooked but highly profitable way to create semi-passive income. And for a limited time, Bob is giving our listeners access to his course on franchising investing for free. Inside, you'll learn how to evaluate franchises, minimize risk, and maximize returns. This course is normally priced at $499. Don't let this pass you by. Go to edu.franchisewithbob.com/RG and get your free course today. Yeah, and that's a lot like all the different funds that we deal with in the real estate business also. These are not fix and flip type of holds, right? I mean, these are businesses, these are IPOs. They're several years, 5, 7 years sometimes, before they maybe have enough money or are able to go public. But let's talk a little bit about the different types of alternative assets. Particularly one that's kind of really hot right now is the AI.
Mhm.
Um, I think there's going to be a lot of regulation in the future. There's going to be a lot of competition. You see the people, OpenAI and Musk and all these guys are kind of infighting and saying, "Hey, don't do this, don't do that." It is. Do you see what kind of future do you see with AI? I know it's not going to go away, but it may be really regulated. So, is it still worth the investment, or do we wait a little bit, see how it kind of pans out? Because there's a lot of kind of uh, I don't know, people are scared of it or something. I don't know what it is, but
Yeah. Well, I think it's a fair question. And I see a lot of skepticism in the marketplace right now around people asking, well, okay, you're building out all this infrastructure, these tools, they make cool looking images, or they can help me write an article or a letter to someone or an email. but how do you monetize this? And
Hmm.
I'll give you a concrete example. Just this week, Microsoft's published this article. Brad Smith, their vice chair and president, he said this is the golden opportunity for American AI. And in that article, he said in fiscal year 25, Microsoft is going to invest $80 billion to build out AI enabled data centers, train AI models, and kind of bolster their cloud. So assuming I think these people are a lot smarter than I am, they're investing so heavily in this technology, but you have this skepticism of, well, they're investing so much, but what is the ROI going to be?
Hmm.
Um, I I've used these tools and I'm generally really impressed every time I use them. I can't make a recommendation. It's hard for me to predict the future. I'm sort of a believer in AI generally, and I think we're sort of early cycle, especially for some of these model companies. Like Anthropic is a company I personally believe in a lot. They're a competitor to OpenAI. If you poll kind of power users, super users, a lot of them prefer what Claude, which is Anthropic's tool, to ChatGPT. And so I
Hmm.
think there's opportunities in this marketplace. A company we help facilitate investment in is called CoreWeave. They're a data center, AI data center play. And just facts, we sold that I think a year and a half ago at like 7 billion. And most recently, I think they did a tender offer for employees in the 20s. And then Bloomberg published an article talking about them IPOing potentially in 2025 at 30 billion plus. And so there's still opportunity there, but I see the skepticism.
Hmm.
How do we convert these AI flows and ideas into profits for companies? And the big theme right now seems to be AI agents. And so, you know, kind of like employees. And I hate to say this, but like maybe this 80 billion investment in
Hmm.
CapEx by Microsoft is to help build out these agents, which maybe end up replacing, you know, jobs for people like me or not you because you're a content creator, you got the podcast and you got, the real estate stuff. But I think we're in this kind of rough period and sometimes that can be an opportunity to invest too, where there's a little skepticism.
Yeah, I agree with that, and yeah, you never know. It's you look at AWS, you look at Microsoft, Google, spending hundreds of billions of dollars in these centers, and then they're saying, hey, but everyone, you have to return to work. I wonder if there's kind of like a return to the office. I'm wondering if they're saying like, let's see how many people we can keep or not keep, and because we need the money for AI, it's
Well, I think you're onto something there. And there was a CEO, I want to say it was Klarna CEO, but it could be someone else. I could be misspeaking, but he basically said they stopped hiring and they're
Mhm.
using AI, basically keep your best employees, your best and brightest, most efficient folks,
Yep.
augment them with AI and let them be sort of generate the performance of 10 regular employees. I think that's kind of a scary thing for me. It makes me wonder what the future of work looks like and all of that, and universal basic income. But that's beyond the
Mhm.
scope of this conversation. But it's definitely a possibility if AI really delivers on its promise.
Yeah, yeah, unless you're front facing, who needs, I don't need editors anymore. I don't need my assistants doing show notes. You just have AI do it. But, ladies and gentlemen, with this AI and what Mike was talking about, it's kind of like, when Tesla first came out, it's pre-IPO and there's a lot of skepticism. Electric cars are never going to work. No one wants, any of this stuff, but look at them now. I mean, it's the valuation of, I know it keeps going up and down, but he's the richest guy in the world for a reason. And I was one of those skeptics. I was like, oh, who wants an electric car? And now I've got two of them. So
Nice.
it's it's changed a little bit. I wish I would have gotten in back then. So talk to me a little bit about what is impact investing. Um, and is it electric? Is it only the people way up here can do it? Is it, so talk to me about what your definition of impact investing, um, and your
Yeah.
perspective on the real world utility of it.
Yeah. Yeah. So shifting gears, I worked at a company previously called C-Note, and their focus was impact investing. And,
Hmm.
like I said, I love all things investing. So it was really interesting to be a part of that world. The way I would define impact investing, Mike, is investing in something not just for a financial gain, but for some sort of social benefit as well. And so, concrete example at my old firm, we would work with these community lenders, and they would help, underserved folks start businesses, provide them capital. They would help them write business plans and give them coaching and guidance. And I've even volunteered for a few of these to, provide marketing education to these folks. But this idea of impact investing is, how do I invest and then make the world a better place, hopefully at the same time? So, kind of a mix of investment and philanthropy in one. Going through that process, I think impact investing is tough because we got to be realistic. Like, even just traditional investing is a luxury for a lot of people. Like,
Hmm.
I forget the exact statistic, but there's, a large majority of Americans that don't have 800 extra bucks in their checking account if, they get a flat tire or their window gets punched out or whatever it is. So they don't have the opportunity to really invest in general. And they don't typically, with impact investing, there's a trade-off, which is you're going to invest for some social good. You're going to get a financial return. It's
Hmm.
probably going to be a bit lower than market, and you're going to make up for that by feeling good about what you're investing in. And so, if you're someone that's just getting started investing, impact investing, I think, is a tough sell because your assets aren't going to grow as fast. And unless you're really getting a lot of personal benefit from that impact, that feeling good about what you're doing, you're probably going to set yourself behind a little bit investing. Not always. There can certainly be great impact investments, but I think it's just a trade-off that not a lot of people have the ability to make. We got to put food on the table for our kids. We got to take care of our friends and family. And so I think, to some extent, impact investing sadly is sort of a luxury for folks. If you have millions of dollars and you're like, oh, this is a cool project and it helps
Hmm.
this community and it helps these folks out, great. God bless you. I think you should do it. But I think for people that are really trying to build that initial nest egg of capital to then really grow, it's a hard sell when you really break down the economics of it. Not to say it's not valuable. It's just, it's tougher.
Yeah, it seems like if you have excess cash flow, some sitting around, why not do good for it? It's kind of like charity work also. It's you get to the point where you can give back and you find some charities that you like, and it's kind of another way of, wow, I can actually impact invest with the charity or a company that I like and actually get money back instead of it all going out.
Yeah.
And that's I'll take it both ways.
Yeah, I think there's some great firms doing really good things and even delivering compelling returns to folks and generating real impact. So I think there's a lot of value in it. I think it's one of those things where the industry is going to grow and mature and kind of evolve.
Hmm.
I think a few years ago, ESG and all these types of, which was kind of in this impact investing umbrella, was really, really in vogue. And then people sort of moved away from that for
Hmm.
various reasons. And so I think there's going to be some maturation and evolution that's going to have to occur. And realistically, not to get too in the weeds, but with impact investing, one of the biggest challenges is measurement. Like, how do you truly measure the impact of what you're doing? How do you attribute, X number of entrepreneurs were able to do XYZ because of X number of dollars? So that means for every dollar I invested, XYZ. That's a really, really tough challenge that I spent a lot of time thinking about. And I know a lot of people much smarter than I are working on still today. But I think the industry is going to continue to mature and grow, and hopefully they'll get better at that.
What do you think everyone loves AI, and then you have the people that are the climate change and the energy and the focal point of not using a lot of energy, and all of a sudden you have AI is just not this computer program. It's using an extraordinate amount of energy in order to do these. Here in Arizona, people are building these, my God, millions square foot, centers
Mhm.
um, to power this stuff. What do you think is going to be the compromise?
Yeah, that's a great question, Mike. And it's funny, I was pulling some research up on this recently. So, McKinsey did this study and they projected. So, right now, data centers in the United States use 147 terawatt hours, or that's what they did in 2023. That is projected to grow to 606 terawatt hours or by 2030. So more than tripling in about what, 5 years.
Mhm.
That's McKinsey's projections, but that's a tremendous, tremendous amount of power just for these data centers.
Mhm.
And then you turn around and you look at where does the US get the bulk of its energy right now? It's natural gas.
Mhm.
Natural gas and coal are something like 60%. So right now, how we generate energy, 60% fossil fuels. I think realistically, we need to dive into nuclear. That's my personal opinion.
Mhm.
I think nuclear power
Sure.
is really going to be the future. These small nuclear modular reactors, and these tech companies are really kind of pushing that agenda. And I think there's a lot of hope people have with new administration, maybe less
Mhm.
regulation, getting some of these nuclear projects moving fast. But I think the problem with nuclear is like moving fast probably means these reactors are up in 5, 10, or 15
Right.
years. Um, but that is such a big theme, and that's actually upmarket has sourced some hedge funds that trade energy futures just because we think, a high level hypothesis is like if you have tripling of power demand from data centers and cloud providers. And most of our fuel is fossil fuels right now, or energy is powered by fossil fuels. It's going to put a demand on those fossil fuels, and it may lead to, if anything, at least volatility in pricing, which hedge funds in theory can take advantage of, if not just outright price raises in those fossil fuel costs. And so I think it's really hand in hand. This AI theme goes hand in hand with the energy needed to power it. And we haven't really answered the question with that. I mean, I know a lot of these firms build power data centers up near like dams for hydroelectric and things like that, but they're going to run out of spaces like that. And nuclear is really going to have to fill the gap, I think.
Yeah, yeah, because there's not enough solar panels in the world to power all these things. And I think Elon was saying you'd have to put, if he's looking at, I think he said in 10 years, if all this stuff happens, you'd have to put solar panels on every farm field, in the United States. It just takes that much because he's
Yeah.
he's he's saying it's just going to triple. It's 600 now, it's going to be 12. It's just going to be huge. So I think nuclear is the best. I completely agree with you. Because the wind can't do it, the sun can't do it. I mean, it's good at powering homes, maybe a hotel, but those terawatts and just that type of a power, you just can't. You need something
Yeah.
big. Um, if we go to upmarket, go to the website, talk to us about the website. If someone's interested and said, you know what, I just want to learn, what happens when they go to the website?
Yeah. So visit us upmarket.co. That's our website, or Google us, you'll find us. But you can browse sort of our existing offerings and see what's open. And you can also see what we've had and what's been closed. We also have a blog with some educational resources. We only can work with accredited investors. So if you
Mhm.
are an accredited investor, I encourage you to sign up. Then what happens is you'll get all of our emails. So if we have a new opportunity, say, we're going to sell Databricks in a week, we'll send out an email saying, hey, we have this new opportunity. Here's the pricing. Here are the expected terms. Here's the closing window. If you're interested, invest. And there's never an obligation to invest in anything. Really, I'd say if you're accredited, come sign up. You don't have to interact with us, but if you see something you like, then feel free.
Mhm.
And so sign up, get our newsletter. And then I also do a quarterly update. So every quarter, I'll sort of share kind of a macro update about what we're seeing and trends. Like this AI energy trend was part of, I think, my last macro update. But we'll also talk about the deals we've closed, the pipeline we have, just really trying to provide resources and education. That's kind of my biggest thing is I love talking about this stuff. I
Mhm.
love hopefully educating people. Like
Yeah.
it's not intended to be a sales pitch. It's like what can we learn about this product? Let's teach you as much as we can about it, and then you decide if it's a good fit for you or not, you know.
Yeah, absolutely. Ladies and gentlemen, again, upmarket.co. And Mike, how can people get a hold of you outside of the website if they have any questions?
Yeah, I mean, welcome to email me, mike.ivancie@upmarket.co. You can find our upmarket social accounts and reach out to me through those as well if you like. Always happy to engage with investors and try and share educational resources I have or create new ones if I see a really good need for it. So yeah, happy to
Absolutely.
chat.
Well, Mike, thank you so much for coming on the Richer Geek podcast. It's very interesting. I love alternative investments, of course. That's the space I'm in. But to learn that we can actually get into some pre-IPO stuff that I thought was untouchable, for the normal people. But ladies and gentlemen, it's Mike Ivancie, Upmarket. Thank you very much for coming on.
Yeah, thank you so much, Mike, for having me on. I really enjoyed talking with you. I feel like we could probably keep going a lot longer if we wanted, but pleasure, and you
Good.
have a great day today.
All right, you too.
Thanks.